Hello friends, Marv Eisen here from Timeless Dollar Trading Academy. And for those of you who are relatively new at using the Taylor calculator, I just want to make an observation that could help you as you fine-tune it and learn to use it more successfully over more trading days. Now, on this particular week, from April 21st to the 25th, there was one trading day where the Taylor calculator really proved its worth, and you can forget about the other 4 days, and I'm going to show you why. Here on Monday, April 21st, prices came in at the bottom. They opened right at the support level of the calculated range at 52.56. Now, what I look for is my best trading days is where prices opened at the support or the resistance level of the calculator and moved throughout the calculated range. Now, the calculated range is pretty accurate in terms of determining where prices are going to trade. And here I'm going to show it to you. I'm going to prove it on April 21st by cloning it and cloning it to the intraday high in the first half hour to hour, which was right over there. And as you can see, prices moved down through the trading range, traded down through it, but then closed the day right where the predicted range ended. So traded through the day. But still in all, this is not a good way if you're just using the calculator how to use it. Because as you can see, prices opened at one end of the range, great, but they traded against it. They actually faded the range. So let's go on to Tuesday. Tuesday, prices opened up above the resistance level, and moved away. Forget about Tuesday. You have to use some patience in trading. And I'm going to tell you that if you're a clone, if you're a scalper, you probably are used to making 10, 15, 20 trades a day, spending a lot of money in brokerage fees and maybe losing money on top of that. And so here on Wednesday, April 23rd, prices traded, they started up nowhere near the range. And still in all, the range is accurate here. I'm going to clone it. I'm going to prove it to you. I'm going to move the clone to the intraday high. Okay, here's the intraday high. Where'd the prices go? Right through the range. The range is accurate. But still in all, when the calculated range is down here and prices opened up nowhere near it, stay away. Why take the chance? Why risk it? And so on Thursday, now here's the day to trade, because look at this. Prices opened up right at the beginning of the range and traded way up through it for the entire day. This was a 116-point day if you caught the whole thing. Now, naturally, you're not going to catch the whole thing, but if you caught 80 points, how good would that be? 80 points is $4,000. $4,000 in the Emini in just one day. Using the trading zone, didn't have to clone it, didn't have to do anything. Just watch for it to open at one end of the range, starts to go up through the range, voila, that's it. Forget about it. Now here on Friday, prices opened up at the previous day's close, and right in the middle of the trading range, leave this alone. You don't know whether it's going up or down. Leave it alone. So that's my video for today. Wait till the prices come to you. Wait till the prices meet where the calculated trading range indicates prices should trade, and that's where you make your trade. And you only have to trade one day. If you have the patience to forget about the other days. You can watch it. You can watch the market for the first half hour to hour. If it looks like it's going to go through the range, great. If not, forget about it. Come back another day. You'll be rewarded. This is Marv Eisen from Timeless Dollar Trading Academy. Thanks so much for watching. Use lots of patience, and I'll see you in my next video.